Hello. So I just wanted to quickly record this because there is something I want to tell you. So as you can see here, what did the market do? So first of all, we have the break. Where do we have the break? The break is actually here. This is not the break. This is just one leg. You see? This is just one leg. We can have multiple of these. It doesn't matter, because for us to have a break, this one is clean, right? So it's just 1, 2, 3, right? So this is the break. This is the BOS, not this one. Okay, this is this side. This side doesn't matter. Okay, so 1, 2, 3. Again. Now, look. This is one leg. 1, 2, 3. This break is valid because it broke this side, right? So 1, 2, 3. Now, as I said, the market will move after we take out stop losses, right? We take this side or we take this side. If we are bullish, we take this side. If we are bearish, we have to take this side. And we go down. And we go up. And there will most likely be some order block above and below. So now, if we know that this is our inducement, and there are two things to check if this is your inducement. First of all, the first high after a break is always your inducement. So 1, 2, 3, break. We create a high, we create a low. You already know this is your inducement. Okay. It's automatically your inducement. So what you can do in this case, let's create it like this, like we have it on the real chart. So now, what is the closest thing, closest order block to the inducement? We have this breaker, because market wanted to go up, it should have come down and went up, but that didn't happen. It went down, created an inducement, went down, so people want to short from this. We take them out and we mitigate the breaker. Do you see why this is the inducement, and why do banks need the inducement? Because they want to trap people that put their stop loss here. They do two things with this. They take your money or someone else's money that put their stop here, and they mitigate out of this breaker, out of these positions. The positions that they went long from here. They went long from here, then they went down, and now they have to come back and close these longs and enter more shorts. At least that's what I understand, what mentors have told me, and what I understand from the logic. So now, what else? That's basically it. But as you can see here, also we have 1, 2, 3. The market always moves in this, well, not always, but 90% of the time, right? 1, 2, 3. So we broke this low. And as I said, the first high must be your inducement. As well as this high, because this is 1, 2, 3. This is also your inducement. So if you want to enter from this zone, it must be above these two. Okay. One, 2, 3. With this, we took out this, and if we go into the real candles, as you can see, we did not take this high, but on the line chart we did. So this is tricky now. We will see what happens. Maybe we go up, maybe we go down, I don't know. Lots of wicks. But if we go down, we must go down from here, because we already took the main inducement in this leg. 1, 2, 3. We can create another high and go down from, let's say, here. I want to wait just to see what happens. Because to me, this trendline liquidity should be taken out. Okay, so as you can see, we took all this trend line liquidity. We broke the main low, as I said we should. So after taking this little inducement, as I said, we could go down or we could create another leg up. We just went down, as you can see, and created a new low. So that's about it. As you can see, the rule of thirds works. It just looks different every time. You have to realize it can look like this. It can look also like this. It can look like this. So you have to understand the market structure a little bit and train your eyes to see these setups, because it's really easy. As you can see, I'm not doing anything hard. I'm just counting to 3. It's so funny. How easy can it be? Of course, you have to understand something else more, like order blocks, imbalances, and stuff like that. But identifying the inducement, you only need 2 rules. One rule is the rule of thirds. You count to 3. The second leg is your inducement in these situations. And in this situation, the rule is the first high after a break, or if you flip, if you invert, the first low after a break is your inducement. Okay? You can train like this. You can invert these setups and train your eyes to see the other way, because it's both are valid, both are gonna present themselves at some point in the market. Okay, so my prediction was right. I'm glad about it. This was pretty messy, as you can see, but if we look at the order flow, this was taken, so the inducement is taken. Next up, what can we see? This candle was responsible for taking the inducement, so it must be mitigated, and it did by this candle. So we built some inducements here, and this candle came up to mitigate this candle and take out this liquidity. So this is done. So what is left is only this candle. This week, yeah, we mitigated something in here, but obviously market wanted to do something else. Take out this and then mitigate this, because this is just order flow. If you understand order flow, we mitigate the candle that took liquidity. That is order flow. Like here also, like I have 2 places I can show you what this means. This candle, this could have been the entry, the perfect entry, because we took out this liquidity, the highest body candle was this. The highest bullish candle was this. So this candle came back to mitigate it. Yeah, I did not do it live, but looking back at it, this could have been your entry. And in here, also, we took out these stops. We mitigated this candle. What is the highest bullish candle? This. After this engulfing bearish candle, we came back. We had a perfect tap. This could have been your entry. And target the low. So we could have had two good entries. Both are 6 and 5 RR. So yeah, the main thing is taking out stops and mitigating an order flow, basically, an order block. An order block can be a wick. Remember that. Wicks are important as well. Okay. That's it. Thank you. Bye.